It looks like one step forward, two steps back at this stage for the markets, and a lot of caution ahead of US Fed Chairman Bernake's speech this afternoon.
Yes, Stephen, I think yesterday we saw that the jobless claims numbers, which were better than expected, helped buoy the market, and you saw a great rally in the South African market also. But then, manufacturing data out of the Midwest yesterday then synced everything, and then I think also it was a main reaction to Spain's fiscal issues there. I think a court ruling that said that the way that they ordered their sales tax was illegal. So I think that brought back a lot of caution and a lot of risk aversion back into the market. So yes, it's been such a choppy session, and today it's Friday, subdued trading. Northern Hemisphere has still got their summer holidays, so and we're waiting cautiously for Bernake's statements later on today, as well as the revision in the GDP figures. We're expecting a revision downwards to about 1.4% from 2.4%, and so it's not boding well for the market. Consumer confidence also out of the United States today, and also expecting really for that to stay the same. But yeah, not a very good day, very subdued trading.
Of course, this US data is getting increasingly ugly. You pointed to the unemployment numbers yesterday, slightly better than expected. Of course, last week they were much worse than expected, and since then we've also had house sales numbers for new homes and for existing homes a lot worse than expected. In fact, some of those at 47-year lows. We also had very disappointing durable goods orders. So the prospect of a double dip in the United States seems to be growing at this stage.
Yeah, I know, it's just very dreary at the moment. I mean, we even saw the effects of that, is that the Dow is now below the key psychological level of 10,000, and that's based really on the economic data that's coming out of the United States, showing that the economy is slagging and is actually growing slowly, much more slowly than people would have anticipated initially. And I think psychologically the bears are out there selling everything in sight, and it's just really a market that is very difficult to trade.
We did have some UK GDP figures out a short while ago, 1.2% growth for the second quarter. That was up from expectations of 1.1%, so marginally better. Any reaction from the UK market to that?
No reaction really, Stephen. I think everybody, as I said earlier, is cautious about what Bernake is going to say and the direction he's going to give, whether there'll be further quantitative easing measures that they're going to instill in the United States. But it was marginally up to, by 10 basis points, and also private consumption came up there, also marginally up. But those two figures come from a very low base, so there wasn't any expectations there. So it was relatively flat, and I think the market just took it in its stride and remained cautious.
Ntombenhle, if he does announce further quantitative easing, or at least an extension of the previous quantitative easing, how's the market going to read that? Because that should be seen as a negative signal, the fact that they need to keep stimulus going for the US economy.
Yes, it should be. It is a negative signal. It does show that there's lots of struggles in the United States. But but there is help that is necessary. The Fed needs to help the economy out and instill some more measures, such as perhaps buying further long-term bonds or that kind of stimulus in the economy. We saw also that in Japan earlier, that's the only economy actually that closed up today, nearly just short of 1%, and that was because they expected the Japanese Prime Minister there to propose new measures to weaken the yen in response to the strength it's seen as risk aversion has come back into the market. So and they closed up because they expected a weakening of the yen, but that's going to only happen next week. So those kind of assistance and that kind of aid into the markets is what really will further buoy or actually help the market going forward.
And of course, the Turkey market has been particularly weak this year, and really pressure on those exporters in Japan because of the strength of the yen. Of course, the yen was trading at 15-year highs against the dollar earlier this week.
Exactly, and it's a major worry for that economy. They do rely mainly on exports, and a weakening of that currency will assist the export market in Japan. And but yes, it's a long way to go, Stephen. A long way to go.
Well, some positive news on this side of the ocean. Sun International's results out a little earlier. Revenue down 1%, EBITDA down 7%, and I think adjusted headline earnings per share down 18%. And I think that was pretty much expected because hotel groups haven't been faring that well. We had City Lodge out recently, and that's one of the better players, also struggling. What was positive, though, a dividend from Sun International.
Yeah, I think it was they did show, look, it was better than consensus, and they did show a good a good dividend, R1 per share, and that was a nice surprise for the market because they haven't done that since 2008. But they did struggle a bit because spend in their casinos was down, and as well as the FIFA World Cup did not really help in their revenues, and and gaming was also down about 2% if I'm not mistaken. And but on the positive side there is that outlook is positive from the company. They're expecting that the low interest rate environment will help return customers into their gaming and into their casinos, and growth from their Chilean and Nigerian operations is also expected to contribute, and they've got less capital expenditure than what is initially anticipated. So yeah, I think the market reacted very favorably to that share today.
And of course, yeah, that share price up quite nicely this morning. We also had Massmart up close to 4% at one stage this morning. I'm not quite sure where it's at the moment. And this was a show that it was negative yesterday after they reported their slightly disappointing full-year earnings for the year to June.
Yes, Stephen, I think, what we're seeing really is a reaction to the positive outlook statement that came out of Massmart. And I think, since it issued its initial trading statement a while ago, it was brought down quite a lot. But I think what we're seeing is now a return to its pre-trading statement levels. And I think the market is anticipating a bottoming in the retail sector. And also, Massmart is a favorable share or favorite share of foreigners. And I think they've got about 72% interest in Massmart, and yesterday the foreigners were net buyers of the JSE. So I think what we're seeing now is just foreigners piling into that stock in anticipation of low interest rate environments, bringing customers back into macro game or and Massmart's offerings.
And of course, that rumour about a possible takeover by Walmart still hasn't gone away. So this share perhaps still carrying a bit of a takeover premium in Ntombenhle.
It could possibly be, but I think the argument, according to our retail analyst, is that Massmart's forward PE is trading just below 20, around about 16, between 16 and 20, and Walmart's forward PE is about 11. So they're going to be paying quite a premium to acquire Massmart. So perhaps there is some kind of expectations or hopes for that to happen, but the likelihood of it happening is very slim at the moment.